Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
If you're a student or a parent trying to figure out the new FAFSA, trust me, you are not alone. They told us it was going to be simpler, but for millions of families, it's just created this whole new wave of confusion. So today, we're going to dive in and break down exactly what's changed and, more importantly, what you need to do about it. And this right here, this quote from a student, Lim Wong, just nails the frustration perfectly. You look at your family's finances, you know your income went down, but somehow the result says you can pay more for college. It doesn't make sense. And this is exactly the kind of situation we're going to unpack. So here's the big paradox. The FAFSA form itself, yeah, it is shorter. It went from over 100 questions down to about 36. But, and this is a huge but, the massive changes to the formulas behind the form have made the results feel way more complicated and, for a lot of people, pretty concerning. To really get what's happening, we have to start with the single biggest change to the entire financial aid system. This move away from the EFC to something new called the SAI. Okay, so this slide really shows a big shift in thinking. The old expected family contribution, or EFC, had a terrible name. It made everyone think it was their college bill, which it was never meant to be. The new Student Aid Index, or SAI, is a much better description. It's really just an index number that helps determine if you're eligible for aid. And here's a really interesting detail. The SAI can actually be a negative number, as low as negative 1,500, which helps colleges see which students have the absolute greatest financial need. I absolutely love this analogy from a high school counselor. It's truly the simplest way to think about it. Your SAI is like your golf score. The lower the number, the better off you are. A lower SAI means you're eligible for more financial aid. So really, the whole game is about understanding what it takes to get that score as low as possible. Now, beyond the SSI, there are a few other huge changes to get on your radar. For divorced parents, the rule has totally flipped. Now, it's the parent who provides more financial support who has to file the FAFSA. And then the big one, the sibling discount is gone. The formula no longer gives you a break for having multiple kids in college at the same time. And that's why so many families are seeing their eligibility for aid just plummet. Also, everybody, and I mean everybody who contributes to the form, has to consent to let the IRS pull their tax info automatically. On the bright side, you can now list 20 colleges instead of 10, and some family farm and business assets don't count anymore, which is a big help for some families. Okay, so that's the what. Now let's get into the how. The form has changed, yeah, but there is still a clear, straightforward way to get this done. So here it is, your 5-step action plan. Let's just walk through this to do this together, okay? Step 1, everyone who's involved, the student, the parent, a step-parent, every single person needs their own account on studentaid.gov. Do this first, it'll save you a headache. Step 2, gather up your documents. You'll need your 2024 tax info and your current bank balances. Step 3, the student kicks off the FAFSA and invites the other contributors. Step 4, everybody checks their info and signs it. And finally, Step 5, you submit and just wait for that FAFSA submission summary. If you follow these steps in this order, it makes the whole thing feel so much less overwhelming. All right, let's talk strategy for a minute. Understanding how your assets are viewed is one of the few areas where you can actually have some strategic control over that final SSI number. See, not all of your money is counted the same way by the FAFSA formula. And this table right here lays it all out perfectly. On the left, you've got the assets that will be counted and will raise your SAI. We're talking cash in the bank, investments, 529 plans, that stuff. But look over on the right. These are your protected assets, the value of your primary home, and this is crucial, the money in your retirement plans, like a 401k or an IRA, are not counted. The thinking is pretty simple. They don't want to punish you for saving for your own retirement. Just knowing this difference can help you think strategically about your finances long before you even start the FAFSA. So, you've done all the work, everyone has signed, you've hit that submit button. What happens now? What are you even looking for, and what does it all mean? Let's walk through it. Sometime after you submit, you'll get an email that your FAFSA submission summary, or FSS, is ready. This is your official document. It's got a summary of everything you put in, and most importantly, it shows you your calculated student aid index. That's the magic number that gets sent to all the colleges you put on your list. And this is the moment of truth. You start getting the financial aid offers back from the colleges, and for a lot of families this year, the numbers are just not what they were hoping for. So what do you do when that aid offer is, well, disappointing?
This quote from a financial aid professional is everything. You have to understand, they know the federal formula isn't perfect. They know it doesn't tell the whole story. So while they can't just go in and change your SAI, what they can do is tap into the college's own money, institutional funds, to help you bridge that gap.
So the most important thing to remember is this. Your FAFSA result is not the end of the conversation. It's the beginning. You need to appeal directly to each college's financial aid office. And here's the magic phrase you need to use. Ask for a professional judgment review. That's the official process that lets them reevaluate your aid package because of special circumstances the form didn't capture. Things like a recent job loss, huge medical bills, anything that affects your family's bottom line. Okay, so let's lock in the most important takeaways here. First, it's all about the Student Aid Index now. Forget EFC. Second, remember the rules for divorced parents and the loss of the sibling discount are absolute game changers. Third, know the difference between assets that count against you and assets that are protected. And finally, and maybe most importantly, remember that an appeal to the college is your most powerful tool. And that brings us to the final question I want to leave you with. The entire system has been flipped on its head. So armed with everything you've just learned, the most critical next step is to figure out exactly where you stand. Do you really know how your family will be affected by all these changes? Now is the time to find out.